The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to a wonderful day at the headquarters of technical trading and investing. It is TFNN.com, and we've got quite the show for you today, I think. But first, we're going to look at the S&P up 13.5 points on 2.4 billion shares. And of course, some of the things we need to start thinking about is the rebalancing. Probably should see a lot of volatility in the last 30 minutes of the day. And would be very interesting to look at those. And of course, we're going to get right into it, which is, do I have it here? I had it listed. Maybe I had it listed from yesterday. It must be from yesterday. I'll pull it up before the end of the show. But what do we have? 5 or 6 stocks out of the NASDAQ. We've got the Facebook going in. We've got some coming out of the S&P. And we'll be looking at it. But I'll catch that at the next break. But anyway, on this day in 1999, we were in full tilt boogie mode into the dot-com bubble. Everybody knew it. Didn't seem to matter. We had more retail investors acting probably not in their best self-interest. Juno Online Services finds a great way to get the internet investors to love your stock. Announced that you would deliberately lose even more money than you already are. And, of course, they basically said that they were going to give a lot of retail services for free, no charge for email, no charge for internet access, and it was going to spend millions of dollars to advertise that over the next year. On this declaration, of course, it had only to do with whether or not you had eyeballs and you had clicks. So on this day, they did that. The stock roared up in the next 2 days from $16.38. Look at that. Probably people that trade now probably don't remember the stocks traded at an eighth of a dollar back then. But anyway, 16.38, which would have been 6 3/8 dollars, to 66.75 in 2 days. Exactly 1 year later, it was on life support at $1.90. Well, it wasn't even $1.93. It was $1.09. So, give you a little idea what traders that have been around for a while have gone through. And not the first boom-bust cycle that we have seen in the markets, but probably the most obnoxious of the bunch, because there was absolutely no basis in reality for the pricing of a lot of those dot-com stocks. Of course, Facebook is going to be going into the S&P, but we need to always remember that the business of Wall Street is to push paper out. It is their business to finance Wall Street. And, of course, one thing we don't know with Mark Andreessen and Zuckerberg is just how much they gave back to the street. They gave a cut or a commission to fund these shares at a discount to the secondary. And whoever is running that secondary, I think it's Goldman Sachs, but it could be Merrill Lynch, one of the other ones out there. Whoever's running that is getting a nice taste. I always like the guy from The Godfather, the Black Hand. Always said, you just need to wet my beak. Just wet my beak. Well, it was more than wet. It was probably a torrential hurricane. But that's what these guys are probably making, too. So working out a way to get this put in the S&P 500 and find a home for all those stocks is their business. But probably going to put a lid on Facebook for some time as the people that are running that secondary are finding, as one person told me, an ass for every seat. And what can you say? GDP numbers came out today, and that's kind of what's pushing the market up here strongly, and with some decent volume today. 18, 23, 30. Market even a little bit higher than I thought it would come out. I thought maybe we'd be in the low, maybe 1805 for expiration today. We still have the opportunity to see some fireworks before the end of the day, but it doesn't look like much lower out here. It looks like people have been rapidly covering shorts. Most of the stocks that have a high short interest rate are the ones that are moving the most today. It's not what can I say, a big function of low short interest stocks, just a lot. But anyway, keeping an eye on it. We've got the last quarter 4.1 at an annual rate instead of 3.6, what we're looking for. Probably a good indication on why the Feds decided to go ahead and start tapering now. And I guess probably a nice little bounce in gold today. That is, what do we have out here? Just so I give it to you. And we're just at over, 1201.80, 1201.90, something like that. Up $6 on the gold contract. Probably a good idea of what's going on. Now, we have a few days left if you're long gold and you are willing to wait 30 days to rebuy gold. You could sell it here and take the loss this year instead of next year. And I suspect, especially in gold, with the amount of retail traders that are in gold, we may continue to see that. So I can't guarantee you we're going to see the washout before the end of the year that I've been looking for, but I suspect we're going to have a pressure for the rest of the year, and it's just going to be on tax loss selling, especially since we're on the opposite side of this. And am I expecting a huge move between now and the end of the year? Not really. We'd have to have some kind of catalyst that I don't see. Could have it, but I just don't see one between now and the end of the year. I suspect we could see something like that the first couple of trading days of next year, and maybe we'll have our low end for gold. If we actually look at the chart, it looks pretty good. We've tested the lows. We've closed back above it. I'm going to have to sneeze. Sneeze out of me, and that's not it. But I think it's some dust blowing around in here. Actually, it is hot down here in Tampa right now. We're running the air conditioner, and this room actually gets even warmer than most. So we're running a secondary air conditioning unit, a portable one over in the corner, and I think I've got a little chill down my spine. But hot down in Tampa today. So anyway, GDP was embrace the bubble as long as it goes. Of course, probably the biggest movements that we've seen have been China. What is it? 9 days down on the China's composite index. It was off 2% overnight in close. I have a feeling we're probably going to get a little back and fill in that, looking at the Shanghai chart for a while. But for the most part, it looks like the Fed tightening is directly attached to China's movement out there, and it has been selling and selling hard for 7 days out here. We talked a little bit about Bitcoin and why China decided to pull the plug yesterday and the day before, and it continues to be a problem with money leaving the country. We've talked about the SHIBOR before, SHIBOR. One thing that we need to know now is that their repurchase rate for interbank lending has gone back up to the spikes we saw in the summer when we saw some weakness in the overall markets. It rose last night to 7.7% from Thursday's close of 7%. So going to want to be watching these China markets when they open up Sunday night to see just what happens. But there's something going on in China. Their decision to pull Bitcoin was mostly because people were starting to move cash out and starting to get nervous in that country. Of course, if you've been watching the news, Putin, the dictator of Russia, is left the once head of the oil clan of Russia out of jail today. He's been in there for 9 years. Putin put in this guy's lawyer also, who died. They didn't give him any medical care. I think he had a liver problem or something. Just let him croak in jail. But old Putin is letting him out because a lot of people are boycotting the Olympics, and it looks to them as a ploy of and or trying to make them think that Putin isn't the scumbag that everybody knows he is. But having a lot of people show up in Russia for the Olympics is looking to be rather tough. They think that they're only going to get about 5/8 of the amount of people that they thought, and this could be a giant loss for the economy of Russia. What do you think? Anyway, what is it? I can't even pronounce the guy's name. Left prison today on a pardon and is heading over to Germany. My guess is that he's going to exit stage left, and Putin, I don't know if it's going to actually buy him anything at all. Of course, shares of BlackBerry were up today. They're surging after the company reported weaker than expected results, but announced a 5-year strategic partnership with manufacturer Foxconn. Going to quit building stuff in Canada, mostly get rid of a lot of people, I suspect. This is one more in a series of giant lies about how BlackBerry is just going to come back from the grave with a non-existent hardware and software. All these things are a long and miserable death rattle for these companies that lose their technical lead. And it's a good way of selling shares. Of course, so many of these shares are owned by large funds. There's just no way that they can get out of them. They need time, and it's always on a basis of trying to get short squeezes to find the only potential buyer in this company. But what can you say? They haven't been able to find a buyer. They're not going to be able to find a buyer. There's going to be, with a short interest level of somewhere around 40 or 50% on this thing, going to be some violent movements in it. If you're going to play it, I would only suggest that you play it intraday and not be overnight in it, because one day they are going to get the message and this thing's going to be 25 cents waiting for bankruptcy. Just don't know where it is. Oh, I know how it's spelled. I just don't know how to pronounce his name. It's Mikhail Kordovsky. Is that maybe how it's pronounced? I know a really good Russian joke, but I can't tell it on the air. But it does have to do with Lorena Bobbitt, if it gives you any idea. We'll be back in a minute. Give me a call, 877-927-6648. That's 877-927-6648.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I have people trying to help me pronounce Mikhail's last name. The reason I didn't pronounce it is I've been to Russia several times. Actually took about 3 months of Russian, and I can, it's been a while, but I can still remember how to say Bajolasta and Spasiba and all the other standard words. But of course, after I quit going there, I didn't need it, so I forgot it. I imagine I could probably pick it up again fairly good. I had the same, pretty much, oh yeah, I know what it means. I also know all the words that you can't say, maybe even Russian on radio. But kind of had the same experience that Andy Hecht had, which is being followed by the KGB. Always the same kind of stuff. Very interesting experience. Anyway, we've got Max on the line from Houston. And how you doing today, Max?
I'm doing just fine. I'm off today, so I can actually see the charts and I can listen to you on the computer. And the question I have on Alcoa is, it seems like, and please correct me if I'm off the mark. Since we got options expirations tomorrow, it won't break the $10 mark. Is that correct?
Well, they actually expire at 4:15, but some kind of bizarre math that the exchange uses, they say they expire tomorrow. But yeah, go ahead.
Yeah. But it appears then that is that why the stock is it limited to $10, or is it about all the juice it's got left?
There's a few things. One, it doesn't have a lot of juice up here in this last move. Probably part of the other thing is that Alcoa had signed some contracts with companies like Ford to start using a lot more aluminum in their vehicles instead of steel. And of course, Ford came out and said that their F-150 that's going to be made out of aluminum is at least delayed 6 months, if not an entire year. So I think the pullback has kind of been in this thing back in around the 10th or so. When it went sideways there, it came back, filled the little gap up it had, but it's going up on fairly light volume out here. I don't think that there's anything with options today specifically about that. It's more a function of just the end of the year. But today they're probably going to pin it at $10 for the close. Is that what you're asking?
Yeah, because I do have the February pins.
Yeah, you're not going to get much anything out of that.
Okay.
So
that's what I was thinking.
Yeah, I mean, for the most part, you're going to see a lot of these stocks pinned to their expiration mark. I was actually surprised. Hang on just a second. For some reason, I've got to log back in here to my account. Let's take a quick look at it. I wanted to look at what is it? IBM. I thought I had IBM on my list here. Here it is. Yeah, IBM actually closing a little bit above that level. It's at 180, 168. Almost always that thing pins itself right at it. It looks like Apple is going to pin right at 550 for expiration. But you're probably going to get just a little bit of volatility in the last 30 minutes, but I don't think enough to ever make the spread of exercising them. So you're probably not going to find anybody buying them.
Yeah. So should I just hold on to them, or just? I mean, they're not due till February anyway. So.
Oh, okay. Well, yeah. I mean, you're not going to see anything today, but yeah. So are they puts or calls?
They're calls, and I bought them when they're, and I bought also 300 shares at when it was about 9.35 or so.
I tell you what, I really don't like that play in Alcoa. I think you've come up here, and that's about all you're going to get. The reason why is all these car companies look to me like they're topping out. What is CarMax? CarMax. KMX. We're seeing a lot of news in these companies in the car and in the industrial part of the business. Also, if we go into the GDP numbers today, you find out that the inventories have been building in a lot of these manufacturers. I think come the first of the year, we're probably going to see a lot of these manufacturers throttle down production. I think a lot of these GDP numbers are building inventory. They're not sell-through. At least that's what the data this morning suggests. So I would probably, how you doing on them? You flat?
No, I'm making money. No,
you know, I'd probably take your money and think about rebuying them in the first of the year.
Okay.
I'd get out. I'd just get out, take your cash, have a good Christmas, and we'll talk to you on the other side of the break. Anyway, give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Did Max hold on through the break? Yes? No? He is there, okay? How you doing, Max? Are we there? Okay. Didn't think he held through the break. But anyway, you can always look at it. But he had some questions in the den here. Can't answer them all right now, but all you really need to do is go for the S&P 500. But you can always get any of those. And, of course, if you use the drop-down menu, you'll go back to the profile or time or sales. So if you ever want the time and sales of any of these, you can always just use the drop-down menu and look at the actual shares and the closing price by time and sales. Check out some of those things. Okay. But yeah, there's a drop-down menu. Most people don't ever think about it, but if you click on the title on the Art of Timing the Trade Charts, you have a lot of things you can dig up here, like SEC filings, insider transactions, balance sheets, earnings dates, and occasionally if you want to change the title or something like that, you can do it. But you can always look at the options, that kind of stuff. Anyway, we're going to get back, but you can give me a call, too, at 877-927-6648. Of course, no email today. I'm not in my what was? Oh, in my home office, so I don't have access to my email right at the moment. But I'll always have that. Anyway, I'll get back to the snooze that we'd already started. Anyway, one more big push on short squeeze on BlackBerry. A bunch of phony deals. Won't matter. They couldn't get anybody to buy them. They've got another good guy. His whole job in there is to keep bailing and keep the thing afloat long enough to distribute as much stock to some other bigger fool than them. And of course, the environmental folks have pretty much won in getting more energy in the United States. The Keystone Pipeline has been delayed for about 5 years. Finally, the Canadians have just given up, and they decided to go ahead and build their own pipeline. There's already one there, but it's not enough. They're going to be adding yet a second one over to the Pacific coast and filling up the tankers with lots of oil and natural gas to send to China instead of us. So we're probably going to see higher, not lower rates comparatively. I think we still have enough oil and gas in the United States in the new areas, but this would have been one more area where we could have gotten access to inexpensive oil and gas. Probably not going to get it now. Doesn't make a lot of sense to be building a second pipeline if they're going to be selling it all to China already. They're figuring it's going to be about 2017 before the new pipeline is completed, and they're still looking for financing, but my guess is that this is the middle finger to the U.S. presidential administration saying that we've given up waiting for you to get off the pot or do what you know. Anyway, that's pretty much it for news. We're going to get back into some charts. Actually, one of the stocks on my scan list had been American Airlines. If he would have held on, I probably would have talked to him a little bit about just how we're probably not going to see a great deal of movement before the end of the year, and his February options are probably going to melt fairly quick. I'd go ahead and take them off, put them back on either the last day of the year or the first day of the new trading year, but I wouldn't be holding on these things for a week and a half to watch the option premium just slowly melt away in Alcoa. There was a question in the den about whether a lot of aluminum is being used in cars. We're going to be seeing a great deal more of it. Like I said, we were looking at some of these more massive units, and the F-150 is going to be the first one from Ford to be using all aluminum in the cars. But you can gain about 2.5 miles per gallon, exchanging out a great deal the amount of steel in a car with aluminum, and that's exactly what the Ford F-150 was going to be. Almost all the bed and a great deal of the cab was going to aluminum. And the problem they have is some, especially the frame rails, still need to be steel. The soft metal in cold rolled steel is a lot more flexible, more springy. You can't put in that hot, and there's some problems getting and welding the aluminum or fixing the aluminum to those metal rails, and that's what's holding up Ford. They'll figure it out, everybody. There's other companies that already do it. A lot of the cars like Volvo and Audi have had full aluminum cars, and it all works out. But for the most part, your frame elements need to be made out of steel just because they need to flex. Eventually, the aluminum, like an aluminum can, will crack, and the frame needs to be out of cold-rolled steel, if I remember right. But take a look at it. There's some other stocks out here that I wanted to take a look at and see how they were moving. Some of these looked very interesting. We've been talking about Under Armour for a while. I thought this company would do well. Thought it would do a lot better with some of the new magnetic zippers and some new technology in what they were doing. This thing's at least hitting its highs out here. Volume's going to be a little light today. October 21st had 1.3 million shares at $86.02. We're seeing that we going through it with what 930,000 shares. Could we get up to that volume? It's gonna be tough. Certainly not a sign of strength. Other companies like this Tupperware brand, this one's kind of interesting. Of course, I'm not going to be looking at any of these being short until the first of the year, but this is where we're going to start seeing the weakness in a lot of these stocks, highly exceeding previous prices on lighter volume over the next 2 weeks. Or, 2 weeks, I guess. Tupperware, this is another one out here, 640,000 shares at $94.98 on October 22nd. We're breaking through that. Look like we're going to close above it. But it's going to be close to 510,000 shares. So a few of these you want to be watching over the next couple of, next hour, I guess. We're down to that now. Roundy's. I don't know much about Roundy's. Let's take a look at this company. Let's move it over here so I can just read it. Roundy's engages the operation of retail grocery stores. Never heard of them before. RNDY. This one is making a fairly clear signal that it's making a high, $9.87 on July 8th at 1.1 million shares. Going through that today with 456,000 shares. Probably not a great opportunity out here, but we're looking at what the preponderance of a lot of these stocks are doing at the highs. Monster Beverage, this thing got beaten up all summer long over calls about people dying from heart attacks. Doesn't look like it's done so badly off the lows, but we are now challenging the highs out here. The October 9th high, 66.12 on 4.6 million shares. We've gone through that. If we close below it, we're going to have a valid sell signal, but certainly you're going to have that on volume at 1.1 million shares. Again, a lot of these a lot of these stocks are not going to do much other than slowly squeeze shorts out the rest of the year, but this is where the setups are starting to come. We talked about CarMax, looked at Ford. I suspect now that General Motors has sold out all of the shares from the government. Actually, the government has sold all the shares of General Motors. That we're going to see a lot of the policies that was really pushing hard on General Motors this year to get it up, and the government basically standing behind subprime loans in the car industry. Probably those things are going to go away. We had been talking about gold a little bit. I'm going to look at this one again. You have a decent buy signal on gold here. Again, I just can't get past the whole issue with a washout, and I certainly want that. I don't think we're going to have a lot of movement in gold for tax selling reasons over the next 2 weeks. So I can't advise getting long this thing, at least until we know we're out of the end of tax selling on this. But you made a pretty nice low out here, 114.68 on June 28th. I'm sitting so far back from these monitors, I have a hard time reading them sometimes. My eyes are a little fuzzy today anyway. And 114.50 for yesterday. Of course, we're closing back up, 15 million shares. So you've got a low with half the volume. You certainly have a what looks like a decent low in this stock. I could see that it's probably a 50-50 chance that you'd want to buy it right here. But I have got two scenarios. One is that we get a washout from tax selling, which I'd love even more than this low. The other one would be that we see the stock go sideways and start building some cause to go higher. One thing I don't really like is that the move from June 28th up to July 21st had about the same energy from the October 28th move at the high back down to this low yesterday. I would have liked to seen a lot more volume drop out. I like the fact that we do see lighter volume out here, but I still think we could see maybe a few people coming after Paulson by selling gold. And it reminds me of a story of where we had Jesse Livermore was caught on the wrong side of a trade, and it was either wheat or corn. And he knew that if he started selling additional, I think he had short was on corn. If he started shorting corn, everybody would just know it was him trying to put it off and put the price down on corn so he could actually buy it back and get out of his wrong-sided corn trade. So he started selling wheat heavily. Everybody thought since wheat was being sold hard that maybe someone had heard something, maybe it was raining too hard or not enough in the Midwest, and it was probably time to get out of both the corn and wheat trade. So he started seeing people sell corn, he started covering it, and he didn't lose a shirt. I think we could still see some kind of hijinks, and the games that they play on Wall Street come in over the next few trading days into the end of the year. But right now I have a feeling that the overhang of attack selling might be too much to overcome in the very short term on gold. We'd have to have some major catalyst. I just don't see it now. I'd rather this thing go sideways on light volume for a little while and maybe then start going after this gap that we had down on yesterday. Let's see here. Somebody else. Okay. So that's pretty much that. We did Monster. Let's look at some other stocks out here of interest. Burger King. You can have it your way, but that way doesn't include a lot of volume. BKW today hitting its high from June 17th with 2.1 million shares. That high came in at $21.73. We've basically missed it by a penny yesterday, but the volume was half. Normally, when you look at these numbers, they're always the highest volume within 0.5% when I'm showing you these on the chart. But even on the day that you actually had that test, it came in with just 543,000. The day before had 1.2 million shares. So even the highest volume out here, just a couple pennies short of that high, the volume is so low that I don't think we've got to get a test of that high. But, of course, we're going in the last 2 weeks of trading. Volume's going to be down. If anybody's short the stock, shorts are the weakest hand in any market, and for the most part, especially in a market that's gone and hit new highs. But keep an eye on this. It is going to be another one, canary in the coal mine. I don't know if there's a lot of volume out here. Seeing some of these retail stocks trying to make a bottom. Aerospatiale, ARO, hitting the bottom. I would be very worried about any of these retail outlets right now. One of the reasons is that a lot of people are calling for a loss of a lot of the big malls, up to 10% of them after the close of this Christmas. A lot of these are in older locations. They haven't been doing well, and they are the most hard hit of those companies that are now selling a lot of things online. And, of course, the upscale stores still seeing a very good brisk business. But a lot of these older malls may be closing, and a lot of these Aerospatiale stores may be going the way of the dodo as those malls close down after the first of the year. So just keep an eye on those. Doesn't look bad. I just don't think we're going to see a lot of upside. We're going to look at ARMS Holdings. We're going to look at Alexion. We're going to look at a few others before the end of the day. You can give me a call, 877-927-6648.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We had many people in the den talking about Rheingold. This is just pennies off its low test. I like to see these stocks go below on a lighter volume than close back above them. But again, we are in a stock here that no one certainly that bought anywhere from July 10th this year is in a winning position of any kind. And the question is whether or not someone sells this stock to take the tax loss this year and decides to buy something other than this on January 3rd or 2nd, whenever it comes back. That is the big problem, is you've got a lot of people that have a lot of tax reasons to sell and not many tax reasons to buy. You can always sell Rheingold now and buy another stock in January, or wait 30 days. And that's the problem of finding these stocks that are already at lows going into an end of the year. Most of the big companies, funds, have already sold whatever they want to sell. But now we're at the point where retail investors are going to go ahead and sell. I think you could sell, what, up the last couple of days? I think that's what it is. Maybe I'll go give the green trader a call and find out. But I think it was as long as the trade had settled before the end of the year, you could claim it as a loss on that year. And, of course, you need to stay out of that stock for 30 days or it's a wash sale. But too many of these stocks at the lows have the tendency in the last couple of weeks to see retail traders go ahead and dump it. And if they're in Rheingold, maybe they go buy EGO or something else like that. and change the names, at least they can take the tax loss this year against maybe other things they've made money on. So when we get into the fourth quarter, the last 2 minutes of the game, as it were, if you were in football, the rules change slightly. There are a lot of organic reasons for things happening in the market. A lot of times people just look at price and volume, but expiration days, delta neutral days, there's a lot of reasons and organic reasons that the market does things that are probably a little counterintuitive. And tax selling is one of those on the big losers. If a lot of people had been buying thinking that maybe that 1235 level was the time to buy gold, and maybe they got a small bounce out of it, and things back down here to the lows, no big deal. But I'm just telling you, it's very hard to make money in the last 2 weeks of any year, especially at stocks that are at lows. On highs, you have at least an opportunity to see shorts leave the market before the end of the year, and maybe you get 1 or 2 or 3% out of it after the market settles on Monday. You're probably talking within a range, even of the most optimistic stocks, of maybe 2% higher. So there's not a lot of movement going into the last part of the year. Just be sanguine. And tell you what, I'm all cash. I'm going to be happy to be all cash. I'm going to come back on the day before New Year's. I'm going to look and see if I want to buy puts, if I think the market's going to roll over. I may wait until the day after we come back and then decide whether or not we're going to be selling into the new year. But I just don't see a lot of opportunity to make money one way or the other, and so I'm going on vacation. I will be back that Friday, January 3rd. So today is the last day you're going to see my smiling face, except on the Tom O'Brien Show at the 4 o'clock hour, where we're going to be talking technology. Not good. And happy solstice to you too, Cub. And, of course, this is the darkest day of the year, but it is one sunny day down here in Florida. We're going to see you back at 4 o'clock with Tom O'Brien. We're going to be talking technology the rest of the day. But every day you can't make money in the stock market. Kind of like being a farmer. You plant corn probably in the spring, not in the middle of the winter. So let the market come to you. Don't get in too big a hurry to try to make a lot of money in the last couple of weeks of the year, at least on stocks that are at lows. Stocks at highs, maybe you get a short squeeze in the next few days. Maybe you can make some intraday trades. But anyway, see ya next year.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.